What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the overall market, and we'll also be covering the SoFi stock heading into these earnings within the next 6 days. And we'll break down some of the numbers we could be expecting for those earnings. We should be extremely thankful that the stock market is closed 3 days, because that just gives us a day where the stock market's closed, so we can just, get a little bit of that FUD off our back. Now, once again, we have two massive negative catalysts inside of the market. That inflation and now this Russia-Ukraine war. And remember, guys, once that CPI data came out, last week, it was terrible. It was absolutely terrible. Stocks started to rally, guys. I'm talking big green reversals. The Fed, Bullard had to come in to, put the fears in the market, to stop the stocks from reversing. So what I'm seeing is people are done with the inflation drama, and they want to invest in stocks that are, at great valuations now that have came down 50 to 80%. So I think the inflation headline is starting to fade, because that nasty CPI data, people were buying up the dip like crazy. I think it is just this Russia-Ukraine FUD right now absolutely killing the markets these past 2-3 days, guys. Putin is in full control. He has the entire U.S. stock market index at the grips of his fingertips, and pretty much what he says goes. And we have Joe Biden, promoting war. I see Putin invading tomorrow. I see Putin invading. So, we have, the pumper Biden promoting war. That is going to cause your stocks to absolutely tank, spreading fear. And that's what Joe Biden is doing. He says, Putin's all in. There's going to be a war started. That's why your stocks are down. I don't believe it's inflation, because we were about to rally on that CPI data once again. That is the facts. And be sure to click the link in my comments section. That is my Twitter. I am live on Twitter. People are loving all of the posts about SoFi. I'm a big bull for SoFi. You guys know that. And I'm just trying to spread as much positives I can inside of this market, with this nasty, Ukraine-Russia headlines going on day by day. So be sure to follow the Twitter. The link is in the comments section. And once again, be sure to smash the like button, and don't forget to drop a comment. What do you think about SoFi heading into these, Q4 earnings in the next 6 business days? And only if you enjoy this video, be sure to subscribe to the channel. We're going to be keeping you updated daily on all the breaking news covering the SoFi stock and the overall market. Let's get into the video. All right, guys, once again, I don't think the inflation is bringing down the market. I think people are ready to invest. There's just another roadblock in the way, and as you guys can see here, you just type in Russia, Ukraine, live, breaking news. That's going to get your stocks reversing hard. And as you can see here, you type in Biden, Russia, boom, you just go. Biden convinced Putin has decided to invade Ukraine. That's why we really sold off into the end of the day, on Friday. So absolutely nonstop FUD inside of the market, and, that's going to bring growth stocks down significantly. And you can see here, Ross Gerber, I believe he's with, like Kawasaki Investments or something. He has his own hedge fund. I'm bullish, for real. People in panic mode over 1.5% rate hikes from the Fed in Russia. I personally believe, people are not really worried about the rate hikes anymore after we saw that reversal from the CPI data. People were ready to invest. I think it's just more of the Russia-Ukraine, which have been fighting for generations. The U.S. economy is taking off, and valuations finally make sense. Hey, that's exactly how I feel. I think, we have sold off enough. Growth stocks are down 50 to 80%. NASDAQ's down 16%. This is a great time to be buying innovation, technology, growth stocks. So as you guys can see, this is like a hedge fund manager, and he's bullish. He's not worried about Russia, Ukraine, or, the Fed rate hikes. I want the Fed to raise the rates, hike them up either 1/4% or 0.5%, a full percent by July. I believe stocks are going to rally, and, hopefully inflation peaks, and then we go on a massive bull run for the next, couple of years. All right, guys, so we have SoFi earnings coming up March 1st, as we can see here, and we have the EPS estimates. We're at about -16 cents, okay? So I've been watching, the past 15 to 20 growth stocks, report their earnings, and I'm telling you right now, 90 to 95% of them have been absolutely terrible because of the guidance, okay? Guidance has been pulled back significantly. There's been only 2 stocks to weather the storm that I follow, either e-commerce, growth stocks, technology stocks, innovation. There's been 2 stocks to rally the storm, and I'm going to show you those details inside of this video. And we can see here, PayPal, Meta, Robinhood, Lending Club, Affirm, Roadblocks, Shopify, Roku, Palantir, and DraftKings were not part of that group, because all of these companies put out bad 2022 guidance, and every single one of these stocks sold off 20 to 40% or higher. 2 stocks were able to rally the storm, and that was Upstart with a double beat guidance raise plus 35%, and then a Snapchat double beat with profitability 60%. So guys, I personally believe SoFi, discluding Snapchat, will have better guidance than every single one of these companies because we got a bank charter license that's going to extremely boost profitability and potentially getting us, to profitability the next 1 to 2 quarters inside of, Q1 or Q2. So I think we will see a guidance raise, an extreme bullish, earnings report. And guys, the best part about it is when stocks are absolutely doing terrible, SoFi will have the spotlight because all these companies reported earnings. Analysts are going to be all over this stock if they put out the guidance that I'm expecting, which is, $400 to $450 million in EBITDA. Analysts are going to be all over it. Hedge funds are going to be all over it, buying up shares, and we will be in the spotlight. That could get us a nice reversal, to the back end of 2022. Once this inflation comes down, we could be seeing all-time highs once again. And I posted a little bit of info on DraftKings, with their guidance. And you can see here, the revenue was excellent. 2022 revenue guidance boost to, $2 billion. Introduces adjusted EBITDA guidance. This is where things went south really fast. If we just scroll down a little bit, we can get the details on that, EBITDA guidance, which is right here. Adjusted EBITDA of negative 825 to negative 925 million, guys. And that is exactly why DraftKings sold off, a quarter of the company. Investors don't want to see this. Even though it's good that DraftKings is investing into the company and trying to grow and take market share, profitability is nowhere to be found for the next 2 to 3 years. SoFi, on the other hand, we could be seeing positive EBITDA in the 400 million range. And I had somebody else on Twitter, post me a little post, and I want you guys to see the details. For 2022, SoFi had a 13 million loss projection overall for the year with 250 million EBITDA without a bank charter. With now bank charter adding 200 million in EBITDA, taking it to 447 million projections. They will be profitable soon with the following, options, margin, extending trading hours, etc., student loans, Galileo. So guys, he's exactly right. The EBITDA projections are literally adding 200 million with the bank charter. If you go onto SoFi's investor presentation for 2020 and you go to the last page, page 36 of 36, you can see here for 2022, adjusted EBITDA right here is $254 million, guys. They are literally about to surpass a full year of EBITDA, guys. We're basically going to be doing 2023 numbers inside of 2022. And as you can see, the overall loss was expected to be $13 million this year. They're projecting, 200 million, profitability, net income for 2023. So basically everything is fast forwarding a year because of this bank charter license. So guys, this presentation is what the analysts have. This is the selected, projection financial results they gave to these analysts. So everything is about to change once they put out the fresh new guidance with a bank charter license. That's why I think, we could potentially get into Snapchat and also Upstart, earnings movements, unlike those other 15 companies that I showed you. I believe investors will flock to SoFi because profitability is literally 3 to 4 months away on the next earnings report because of this bank charter license. So you can see other people that are bullish on Twitter explaining the same exact thing that I've been trying to explain to you, that, everything is fast forwarding 1 year and the analysts' expectations are not having these projections for this bank charter. And so I think everything will change March 1st. Once again, that's 6 business days because we don't count, the President's Day, okay? We can't count the President's Day when a president has done nothing for you but get your stock investments to all-time lows, your gas prices to all-time highs, and inflation to 40-year highs. So we can't, celebrate, the President's Day, but what we can do is be happy that the stock market is closed on President's Day once again. All right, guys, and a lot of people want the details on that darn EPS because that's what investors really fear. A miss is going to happen on EPS, of course, because we never know the expenses and details and stuff like that. So the last earnings report, SoFi reported a negative 30 million net income loss, right about 5 cents. So remember, I listened to the earnings call. Everything's thriving. The marketing's thriving. The cross-buying is thriving. So, costs are going down because they're, cutting expenses when they cross-buy those members. So guys, if we just go off this last earnings report of negative 30 million and 5 cents, we can see here that for Q4, they expect around 272 to 282 million in revenue and also adjusted EBITDA up to 5 million. But here we got the non-cash items stock-based compensation expense, fair value warrants, 80 to 85 million. So I don't know the exact details of how this is going to be counting into the earnings. I'm just going to slap it on as an expense, guys. Negative 85 million, boom, okay? So we're just going to do the worst outcome that we can expect for these EPS estimates. All right, guys, so Q4 guidance, revenue 272 to 282. So far, the last two earnings reports that I've seen, they've always come about 10% on the high end. So we could expect, about 310 million revenue off their, last two earnings reports. So that's like what I'm really expecting, a 10% beat on the high end. And going off the last two earnings reports numbers, I see lending at 264 million, technology 56 million, and also financial services at about 12 million. This could potentially be 332 million. It's really going to be because of the lending exploding because of the Pagaya partnership. That'll be a 55 million, jump from Q3, which would be absolutely incredible. And also the EPS Q4 guidance from the analyst is negative 16 cents. Remember, that's negative 96 million. And also we're going to add on the 80 million warrant expenses. So remember, guys, the Q3 EPS estimates was negative 5 cents, which is $30 million. So what we're going to do is just slap on the 80 million. So we can see here if we add on these 80 million warrant expenses to, the last earnings report of negative 30 million loss, that's going to bring us to about negative 110 million. That's why you can really see that the analysts have negative 16 cents on the estimates, which is negative 96 million. So you can see the analyst expectations for that negative 16 cents and negative 96 million are right about where we expect, a negative 110 million when you add on these 80 million warrant expenses. But you have to realize revenue is exploding at the same time. Even with those, warrant expenses added on, the revenue could come in anywhere from $50 million to $30 million higher than the Q3 earnings. So as you guys can see, with that revenue exploding, my estimations are a 60 million loss, because we're just going off of like the negative 100 million estimate and just subtracting about a 40 million gain in revenue. So my estimates are right around negative 10 cents. That's just my expectations if we just go off of what the company was doing for Q3. Slap on, this 80 million warrant expenses. And remember, costs could even go lower with more cross-buying accelerating. So there's no telling where the earnings could go, but I'm just going off the last earnings report for Q3. I'm expecting a negative 10-cent loss, which is right around negative $60 million when you slap on those warrant expenses and also add in, 30 to 40 million in revenue, a boost from Q3. And of course, getting to the big part, the guidance. As long as we beat that EPS, guys, and I expect guidance to be for Q1, 320 to 330 million in revenue with 1.6 billion revenue or potentially higher, with the bank charter license and full focus now. So if we have these type of numbers, this is going to be the high end of analyst expectations. This will be a significant boost in our stock price, guys, because we are going to be one of the very few companies putting out amazing guidance, in this nasty environment, which you really only saw with Snapchat and Upstart out of, 15 to 20 growth stocks. So I believe investors will flock, the analysts will flock, and we could see SoFi have a great year by the end of 2022, especially if the inflation data finally pulls back, to 5 to 6%. If you made it to the end of the video, I want to say I really do appreciate it. I enjoyed doing this video for you. The stock market is absolutely insane. There's a different negative catalyst every single week, but right now the big one is definitely the Ukraine-Russia war. I believe, investors have finally priced in that inflation headline once again because the CPI data came out and we were rallying literally minutes in. The Fed had to literally step in to scare people to stop the stocks from rallying. So I believe this FUD we have with Russia-Ukraine is pretty bad, and stocks could continue to be suppressed. But remember, if we are one of those few companies to put out amazing guidance, I believe, SoFi will be, one of those few stocks that people feel comfortable heading into, even with this nasty environment. And we could be one of the stocks that make it out of this, nasty environment that we're in, because we're going to be profitable soon. Unlike a DraftKings that, has another 2 to 3 years of losses headed their way, I believe SoFi is going to be net income positive $200 million or higher this year. That's exactly the type of growth stock you want to be in. Extremely fast growth and also profitability. So once again, my name is Kyle. I hope you have a great day.